Welcome to BigONE Weekly News Update. I'm Mia. The crypto market staged a powerful rebound last week, with Bitcoin leading a broad-based rally across major digital assets. BTC surged nearly 23%, climbing from around $63,000 to close near $78,000, just below the $80,000 level. Ethereum gained roughly 30% to approach $2,500, while Solana rose 27% to around $95. Among major outperformers, HYPE jumped 40% to above $80, while ZEC surged more than 70% to a new all-time high above $850. The scale of the move was particularly notable given the market's prolonged period of low volatility. Bitcoin's 60-day annualized volatility had compressed to around 23%, with daily moves averaging roughly 1.5%. Against this backdrop, BTC's more than 22% weekly gain represented a rare 5 sigma event, highlighting the magnitude of the breakout. Macro conditions fuel the rally. The rally was supported by a combination of macroeconomic and regulatory developments. Renewed concerns over U.S. debt expansion and dollar credibility have strengthened demand for scarce assets, such as Bitcoin and gold. Gold climbed above $4,600, reaching a 3-month high, while gold-related equities posted double-digit weekly gains. At the same time, the U.S. dollar weakened as long-term Treasury yields remained elevated. The U.S. Treasury is also expanding its long-term bond buyback program. Beginning September 9th, the maximum size of each operation will increase from $2 billion to at least $4 billion, with the possibility of further expansion. Although the program is designed to improve liquidity in older, less liquid Treasury securities rather than function as traditional quantitative easing, markets have interpreted it as a form of gradual fiscal easing. The resulting macro backdrop is unusual: a weaker dollar, stronger gold and Bitcoin, alongside elevated long-term Treasury yields. Rising term premiums reflect concerns over fiscal deficits, heavy debt issuance, and the Federal Reserve's inflation outlook. U.S. crypto regulation gains momentum. Regulatory developments have added another layer of optimism. Former President Donald Trump recently hosted a closed-door White House meeting with senior executives from Coinbase, Robinhood, NASDAQ, and ICE. Discussions reportedly focused on building Senate support for the Clarity Act, with the first procedural vote scheduled for September 15th, following the congressional recess. The meeting has renewed expectations for progress toward a comprehensive federal crypto market structure framework. Attention has also returned to the possibility of a U.S. strategic Bitcoin reserve. Trump acknowledged that the idea remains under discussion, although no formal purchasing commitment or immediate policy decision has been announced. Meanwhile, the SEC and CFTC are pursuing alternative regulatory pathways. The SEC has proposed targeted exemptions for token fundraising, including a framework allowing startups to raise up to $5 million over 4 years, and a broader exemption permitting up to $75 million over 12 months, alongside streamlined disclosure requirements. The SEC has also sought to clarify the legal distinction between underlying non-security crypto assets and their initial investment contracts. Separately, the CFTC indicated that it could advance new crypto rules under its existing authority if congressional legislation continues to face delays. The market faces a critical macro test. Despite the strength of the rally, the market now faces several important catalysts. The upcoming PCE inflation report will provide a fresh test of the disinflation narrative, while NVIDIA's earnings will offer insight into the sustainability of the AI investment cycle. Later in the week, the Jackson Hole Symposium will take center stage, with Kevin Warsh's address expected to influence expectations for monetary policy and perceptions of Federal Reserve credibility. A particularly dovish message could reinforce concerns that the Fed is coming under fiscal pressure, potentially pushing long-term yields even higher and supporting demand for gold and Bitcoin. Conversely, a firm reaffirmation of the Fed's 2% inflation target and institutional independence could help stabilize the bond market. For now, U.S. Treasury yields remain a critical indicator for broader asset pricing. Conclusion: Bitcoin's 5 sigma rally marks a dramatic shift from the prolonged period of low volatility and consolidation that preceded it. The move has been supported by a combination of macro concerns, renewed demand for scarce assets, improving crypto regulatory momentum, and expectations for more accommodative fiscal conditions. With Bitcoin approaching $80,000 and major altcoins posting even stronger gains, momentum has clearly returned to the market. However, upcoming inflation data, Nvidia earnings, Jackson Hole commentary, and Treasury yields will determine whether the rally can develop into a sustained new trend or faces another period of volatility. For now, crypto has broken decisively out of its low volatility regime, and the next test will be whether that momentum can hold. Join BigONE today and take advantage of the growing cryptocurrency market.